All right, what is up, tycoons? What's up, traders? Super excited for today's video. We're going to cover 3 altcoins that have been on a massive tear since the beginning of the year. 2023 has been a great start for a lot of crypto, especially these 3. Now, this is a viewer request, okay? So if you want to see your tokens, your cryptocurrencies in the next video, all you got to do is comment down below, and I'll make a video on them as soon as I can. We're going to cover Polkadot, we're going to cover Avalanche, and we're also going to cover Solana in today's video and give you guys a really nice update and break down some of the different strategies that you can use to help understand price action and potentially spot entries and exits, as well as go over the key levels that we need to hold to continue bullishness and continue the trend that we've had since the beginning of the year. So make sure to smash the like button, subscribe to the channel if you guys are new. We're going to jump straight into it and hop on over to TradingView now. And we're going to break this down on the daily chart. Okay, so we're starting off here with Polkadot. Actually is going to be the first one we take a look at. There's 3 sets of levels, all right, as you can see all over the chart in yellow that I like to use. These are the 3 most common and well-respected Fibonacci retracement levels. They are the 61.8, the 50%, and the 38.2% level. Now, we also go over divergences such as bearish divergence or bullish divergence. I'll give a nice explanation of those. So make sure to stay tuned throughout the whole video because you'll learn a lot. Now, you use these to establish trend continuation because nothing moves in a straight line down or a straight line up. Rather, you get a move down, a retracement, and a continuation of the trend, or you can get a move down, consolidation, right? And then a breakthrough of those major retracement levels. So that's why we use them. That's why we've been using them. And you can also use bearish and bullish divergence, as I mentioned, to really help you out as well. So let's go over the Fibonacci's a little bit more. So if you see, we have a swing high up here connected down to our swing low at this point. We had a very sharp sell-off. And what we did was we retraced, and anything that comes between the 38.2 and 61.8 is considered a healthy retracement to possibly continue the trend. Now, again, if you break through those levels, then that's when you can look for potential reversals. But what we did was we came down, we retraced exactly up here to the 38.2, and then we continued that trend where we made a low and then a lower low. All right. But just because something's in a downtrend doesn't necessarily mean there aren't opportunities to buy and go long. If you look here, we had a bullish setup here known as a falling wedge, right? Where we had a trend line here on the top, trend line here on the bottom. Okay, so that's one possible bullish indicator. Our second one is actually going to be on the relative strength index. We have a low and a higher low where the price of the token actually made a low and then a lower low. So while the token was decreasing in price, the token was actually increasing in relative strength. This is a term known as bullish divergence. And so we had 2 kind of things indicating we could get some type of a pop. And what did we do? We came up to our major retracement levels. And this is where you want to, set some, basically protect your trade, okay? Because we know that if we reject these levels, we're most likely going to continue that downtrend. Okay, it doesn't mean you always have to sell just because you come up to your retracement levels of resistance, but you want to ultimately protect the trade at these levels in case we end up breaking below them and continuing the trend. Now over here, now we have a new swing high and a new low after continuing the trend. And again, you see we consolidate, we break out, retest, and then ultimately push up higher and get the reversal where now we have a high and a higher high. Now, this is the beginning of January right here. And remember, I said since January, these things have been on a massive rally. So what we're going to do is we're going to see if we can hold our new retracement levels of support, okay? So if we zoom in a little bit more and break down the recent price action and the recent levels, you can see that we are maintaining the 50% retracement level right here at 6.887 right now. Now below there we have 6.649, and we're going to be bearish below there. If we consolidate through this area and flip that to resistance from support, then that's going to be a sign that we could be getting a potential reversal to come back down and retest some of these previous lows. So we'll be bearish below 6.649, but for now we're doing a really good job. We bounced off the 50%. We're holding above the 38.2 right now, and if we can continue this bullishness, we could see a move up here to our bullish price targets of 8.471, 8.902, 9.45, as well as 10.147. Now, if you look at your relative strength index, we did get a breakout here. Okay, so just like we had bullish divergence earlier, here we're actually making a high, and then we're actually making a higher high. So, the token's clearly in an uptrend, increasing in price, but the RSI, the relative strength, is decreasing as we have a high, a lower high, a lower high, lower high, lower high. So we're actually losing relative strength as the price is going up higher. And, this is a sign we could get some type of a pullback. And sure enough, we pulled back from about 7.15 all the way down to about 5.88. So there was a nice little pullback, but we did what we wanted to do originally, which was break out from our resistance retracement levels, okay, and retest those as support. And that's what we did. We retested them as support, pushed up higher, and on that push up higher, we actually broke out past this bearish divergence trend line that we had. So we want to see this RSI stay above this dotted line right here, our initial bearish divergence trend line, and flip that from an area that was resistance all of these times over here into potentially now an area of support where we can look to try to bounce off of there. We don't want to see a look above and fail where bulls are presented the opportunity to continue the push and continue a bigger move and really don't take advantage of that opportunity. If we see this come to back down below and start trading below this trend line, we could end up seeing it break below our 61.8% retracement level. So that's the key levels and a summary of the recent price action on Polkadot. Let's go ahead and look at AVAX real quick. We'll take a look at Avalanche. Now, Avalanche, Avalanche is looking pretty good as well. All right, if we take a look and zoom out a little bit, we just broke out of a long-term trend line that we had been rejecting for a little while. So if you see here, right, we had rejections over here, rejection here, and then we got a clean breakout to the upside. But we're battling this major resistance level of 22.11 that I highlighted in the last video that I did on AVAX. So we really want to see us break above 22.11 and flip that from resistance to support. Then we have the potential of hitting our bullish price targets above, which are 26.45, 29.10, 32.46, and 36.73. All right, but there's a little bit of work to be done before we do so. If we zoom in just a little bit more, we can see that we have our retracement levels of support here now, just like we did on Polkadot. So, we've started a nice uptrend, right, since the beginning of January, and we're pulling back a little bit, but we're holding above our 50% retracement level at 1671. All right, our 61.8% retracement level is going to be 1527. So just like Polkadot, below our 61.8, if we flip that from support to resistance, then we're going to be bearish below there and know that most likely we could be coming to retest some of our previous lows. Now, if you take a look, we also have a bearish divergence in the making here, right, where we're making highs and higher highs on the price of AVAX, and then we have a high here and lower highs here as well. So we are seeing us lose a little bit of relative strength as the price of the token has been going up. But just like we did on Polkadot, what we're going to do is we're actually going to look for a breakout of this trend line, right? And then ultimately flip that from resistance to support. So if we get a breakout of this bearish divergence trend line, that could coincide with a breakout to the upside. If we, right around that 22.11 area, that's our major resistance level. Now, if we also take a look here, we do have a bullish chart pattern forming up a little bit. We kind of have an inverse head and shoulders, right? So we have, a left shoulder right here. Okay, here's our head, and then we're forming this right shoulder here right now. So if we can break this trend line right here, okay, this white dotted line trend line, then we have the possibility of seeing the inverse head and shoulders play out and take us up here to that 26.45 level. But again, 22.11 has been a pretty strong resistance area that we've been rejecting at the moment. So if you're bullish on this, you want to see us stay above our major retracement levels. You want to see us get this inverse head and shoulders pattern to play out, break past 22.11 and come up to our first bullish price target of 26.45, as well as break out past this bearish divergence trend line along the RSI. Now, if you're a little bit bearish and you think that this thing is going to pull back, all right, it's all healthy pullback area and territory above 1527. So that leaves a lot of room to pull back. This thing can pull back about $4 right now, which is a pretty big amount percentage wise, and it can pull back $4 and still be bullish. So it would really need to break below 1527 and flip that to resistance. If it does that, then that's when this thing may head back down lower. Now, the last one we're going to look at is going to be Solana. So we'll pull up Solana real quick and go over the chart on Solana. And on Solana, we have some pretty clear and well-defined supply and demand zones. So that's going to be the strategy that we're looking at here. Okay, so typically a supply zone and a demand zone is going to be an area of consolidation on the candles. And a supply zone is going to be an area where there's an imbalance of sell orders pushing the price down lower, and the demand zone is going to be an area of imbalance where the price ends up pushing up higher. Right. So we can see there's been lots of times where we've come up and, try to consolidate in these areas, but pushed back lower each time we've come up in this supply zone. So our overhead supply zone, aka resistance levels, right, is going to be between 34.31 all the way up here to about 39.5, let's call it. Okay, and our demand zone below is going to be right about 13.172 all the way down to about just about $8. Okay, so it's a pretty big range, but these are the major levels, right? These are the major areas of imbalance. Okay, so these are the areas that you want to pay attention to. Now, if you look, we haven't broken through our major retracement levels of resistance, right? We have our swing high up here connected down to our swing low. We had a very, very big move to the downside, all the way from about $38 down here to $8. And look at what we've done. We've retraced and now we're consolidating. Okay, so we want to see us, if you're bullish on this, continue this consolidation, breakout, retest as we saw on Polkadot, okay, and then continue up higher into our supply zone. These are going to be our bullish price targets to the upside, is that overhead supply zone. If you're bearish on this, right, all of this is still healthy territory and a healthy retracement. So it could just end up continuing that trend and possibly retesting some of the previous lows. Now, the levels specifically are going to be 27.11. That's going to be your 61.8% retracement level that we need to break above and flip to support from resistance to continue going higher. Everything below there could still be bearish. All right. Now we're holding above the 50% level, which is 23.47. And we're holding above the 38.2 level, which is 19.842. See how we retraced, but we've done a really good job of respecting these levels and, really consolidating and absorbing a lot of the price action. So things do look good for the bulls, as we're starting the phases of retracing, consolidating, but we just haven't got confirmation of a breakout, right? So we need to be mindful that ultimately this is all healthy retracement territory, and there is a possibility we could continue that trend downwards. So definitely be mindful of that, okay? The market isn't going to do what you want it to do. It's going to do what it wants to do. And a lot of people have learned that throughout 2022 and learned that, maybe just buying blindly into things sometimes isn't always the best strategy. So hopefully you guys learned something new in this video. And if you did, smash that like button, subscribe to the channel. I do these viewer requests every week. So comment down below on a token, a cryptocurrency you would like to see me make a video on, and I'll be happy to get to it as soon as I can.